So I'm here in Las Vegas, Nevada, the largest mortgage broker conference of the year, AIM Fuse 5, and I've learned some awesome things this week. Got some great market updates for you for October 2022 that I look forward to sharing with you. The Strip is not my place to hang out, but it's the place I needed to come to get the great content I'm about to share with you. So the first market update to share with you, you probably heard that the Fed raised its rate yet again, and the markets are spooked. Are we gonna go into a deep recession? Are we not? The markets cannot figure themselves out, and as a result, interest rates have spiked quite a bit. Now, the question on everybody's mind is this going to crash the market? Are we gonna see a crash in real estate? And I know I've said it before, I'm gonna say it again. The answer is emphatically no. Okay, it is not the same as 2008, and we have the data to prove it. Take a look at this graph. So back in 2008 and even beyond, up to today, look at what the average credit scores have been doing with loans. As you can see, the last 5, 7, 10 years, borrowers with over a 720 and particularly over a 760 have skyrocketed, and equity is at an all-time high, okay? We are not seeing the same credit behavior that we saw years ago. Take a look at this other graph. It's related to inventory levels of homes in aggregate, the supply of homes basically, since the 1980s through today. Take a look at the trend of what inventory has done over the last decade, okay? This is available homes for sale. Compare that to 2008. Look at the level of available homes for sale and look at what the credit levels were doing. Okay, this is not the same market. So when you hear the news calling it a crash and a mortgage crisis, that is not the case, okay? That is not the case. Is the market softening? Yes, it absolutely is. But is it crashing as a result of a credit crisis? No, it is not. Okay, so now let's talk about affordability. Is it true that interest rates going up are making it much, much harder for buyers to get approved for a more reasonable payment? It absolutely is. But take a look at the math. So the last couple of years, so many people had to make offers on homes, $50,000, $30,000, $20,000, in some cases $75,000. We heard all kinds of stories above the asking price of the home. Now compare a mortgage payment that's, let's say, $400 higher than it would otherwise be. How many months at $400 more per month would it take to make up a $50,000 higher price? Well, just pull out your calculator. What's 50,000 divided by 400? That's the magic number of months. And is it very, very likely that rates are going to come down before that point, well before that point, to where that homeowner can get into a much, much better mortgage? And the answer there with a high level of certainty is yes. So that actually leads to the third update. So there's a product that's hit the market that's pretty popular right now with buyers, and it has to be paid by the seller, and it's called a temporary rate reduction or 2-1 buy down. And basically the way it works, because rates are now above 6%, you know, they're in the mid 6s, I think, as the end of this week. What it does is it takes, let's say the note rate is, you know, 6.25%. Well, the first year of the loan, the borrower can pay 4.25%. So that's going to save them quite a bit of money. In the second year of the loan, they'll pay 5.25% instead of 6.25%. So it is a fixed rate. It's not an adjustable rate, but that interest savings has to be paid by the seller. So we're putting more people into this product. So your friends and family who are thinking of buying, they're going to get a better deal off the top because sellers are willing to negotiate not only the price, but in a lot of cases, the temporary buy down as well. So that's your market update for October 2022, and I hope you enjoyed this data. Contact me if you have questions about the market. Contrary to popular belief, I believe it is a good time to buy. I believe it is, you know, a healthy market when there's a good number of buyers and sellers, and that we're getting back to what we might call a more normal balance between buyers and sellers. Take care, everyone, and I'll talk to you soon.